Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. I have said repeatedly in this commentary for months and months that the most significant feature of this market has been and still is, even now, the very significant lows of 2021 at 15,665, which led to the lows of late November 23 plus the lows in 24, most recently in late October, November and early December, and I suppose also the congestion in January and February this year. It is at this point I feel obliged once again to mention the big descending scallop pattern I've been going on about for months and months and what it may mean within the near-term universe. So the key level had been and is the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it, a significant break below this could give a downside potential for the descending scallop pattern down in the 13,830 zone. I am now starting to think that this pattern's time has come and gone, and maybe I should retire it completely. I'll ponder on this some more. Overall, it still all comes down to what the market has done and whether it finished fondling that key 15,840 zone. During the middle of March, it looked like, well, it might well have done so, but the retreat back down below the gold long moving average, currently at 16,310, 2 weeks ago, and again this week with a lower high seen last week compared to 4 weeks before, began again to suggest the top side has been held down, if at a higher level than before. What looked like stabilization over the gold long moving average does not look so today. In amongst the other moving averages, between 16,060 down to 15,735, we have the dark blue neckline, currently at 15,940, of the late July to late November 2024 head and shoulders pattern. I asked 2 weeks ago, and I quote, will prices pull back down to this level as well as the now broken bright red mid-December 2024 to early March 25 downtrend nearby? By the way, this downtrend has since been retired. I carried on. I am not sure, but it does begin to look as if the market is contemplating such a move. If it does, then it puts at risk the topside targets. You see, 3 weeks ago, that's the end of the quote. You see, 3 weeks ago, I laid out targets for the small mid-December 24 to late February 25 action being a possible double bottom, even Adam type, though admittedly not a very pretty one. We still have a primary target X up there in the 16,825 area, very close to where the market peaked 3 weeks ago at 16,780, enough for me to consider it being reached, as well as a harder to achieve secondary target X1 up in the 17,170 area. As I said last week and repeat this week, these topside targets were and are now at risk, and they will remain so unless we see a significant pullback upwards. Right now it does not look that way, though I have to admit the downside is a bit of a minefield as well, with below the dark blue neckline the flatlining green short medium moving average currently at 15,860, plus the flatlining mauve medium moving average a little further down currently at 15,790. Now, there is one opportunity that the market can utilize from the late February today action, should it desire to, and that is to look at the action as a possible bullish halfway hesitation. However, that would require a move higher and soon, though it would give us a potential, not a target, but a potential, all the way up to the 17,400 area should that occur. Right now, I cannot say yay or nay to this idea. LME 3-month zinc. Much like LME aluminium, there had been and are a number of patterns here that have affected this market in recent times, all happening all at the same time. The first is the broken and breached but still refusing to die old dark blue upper time, which is where the market has been based the last 2 weeks, currently at 29.45, of the May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, currently 27.80 to 29.45. This one will not die. Then there is the purple lower time, currently at 29.11, of the somewhat newer February to August 2024 bullish shift pitchfork. Prices have been pressing below this lower time for weeks now, and we are once again below it. But for some reason the market had still not fully let go of it, though today we are some distance below it, but to me not enough just yet to fully let go of it. But we are close, getting close to doing so. I'll continue to say watch this carefully at least for the next few weeks. Then an even more recent pattern, an early January to early March this year reverse head and shoulders pattern. Possibly earlier I thought it might be a reverse head and shoulders bottom, but right now it's looking more like a reverse head and shoulders continuation pattern, with prices pushing back below the bright red neckline currently at 28.88. 2 weeks ago I favoured the reverse head and shoulders bottom idea, and I laid out a primary target X overhead at 30.92 and a secondary hard to reach target X1 up at 31.68. I am now contemplating possibly retiring these two targets already because, as I said last week on the earlier move higher, and I quote, just keep a wary eye open in case it becomes a false break, end of quote. Looking to late last week and this week's actions, prices have dropped down through all the moving averages and now testing supports at 28.25 and 28.10, which back in January held up prices, and at the turn of February into March did the same, more or less on a closing basis. In the meantime, whilst all these big picture and some not so big picture patterns try and sort themselves out, you can see there's a lot of stuff fairly close to the market, and I even started wondering 2 weeks ago if I should look at the whole dark blue middle time below all the way down to the big old 50% Fibonacci line overhead as a super large congestion zone. Now I'm still pondering on this idea. LME 3-month tin. As in some of the other metals I've discussed, there are a number of patterns here affecting this market, but most of the ones from a few weeks ago have reached their target levels and are no longer relevant, so I'll concentrate on the ones that still are and add a new one as well. The first one is an old one. It is the dark blue November 23 to November 24 bullish shift pitchfork. This pattern is large and is also still live, with prices in between the lower time below, currently at 31.410, and the middle time above, currently at 47.875. Yeah, that's how high it is. Next is the pattern I drew 3 weeks ago, the pink early February to early March bullish Andrews pitchfork. I wanted something to capture the bullish angle of attack of this market, and this has done so even if it was breached 3 weeks ago. Prices are currently in between the middle time below, which we have tested today, currently at 36.300, as well as having pushed up over the significant 38.2 Fibonacci line of the March 20 to March 22 move at 36.365, and then overhead the upper time currently at 38.175, which is being tested today as well. Finally, we have the bright green March based bullish shift pitchfork. A new, supposedly shallower pattern, but one that has a certain synchronicity with the previous pink bullish Andrews pitchfork. I'll say no more than that on this pattern, other than we are in between the middle time above, currently at 37.440, and the lower time below, currently at 35.925. Now, the last 3 weeks' action has allowed me to draw this new pattern, and it has also allowed me to look at the March action as a potential double top pattern, or a potential bullish halfway hesitation. Which it will be is not certain yet, though I do favour the bullish halfway hesitation right now. Now, if that were to happen, then would have a potential, not a target, it's not a target yet, but only a potential all the way up to the 40,000 area. Quite a sweep higher should it come about. However, if we choose the double top idea, then watch out for the neck of this pattern, which is around the 50% Fibonacci line of the March to October 22 move at 34.175.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.